much as in the commercial insurance space and the personal insurance space, there's just a very limited number of insurance partners to work with. And the issue with that is the placement of certain homes, units within the insurance marketplace. And one thing that we're facing is an appetite restriction. Here in South Florida, there's a large amounts of property that are older property. And older property can cause a lot of havoc with losses and claims with the insurance companies. But also on the other side, when these claims go through, public adjustment comes in, their attorney partners come in and start going back and forth with the insurance companies. Overall in South Florida for the last, let's say 6 to 10 years, personal insurance carriers are in a losing scenario. So for example, when you purchase your insurance, let's use as $1, and you have a claim, the carrier pays out about $1.20 of that. So there's always in a losing scenario. More importantly, when there's a losing scenario, they restrict their guidelines and they have to become profitable in the state of Florida. That's why you see many personal insurance carriers leave the state. For example, if you about a month ago or about 2 months ago, we saw Farmers Insurance leave, right? So Farmers Insurance look at South Florida or Florida in general and say, this is a chaotic state. It cannot perform positively anymore in the state, so we need to leave. Well, guess what? Most likely they're going to come back in the next few years once they see some softening in the marketplace, some change of the legislature. Hopefully that takes effect sooner rather than later. But a lot of carriers come in when the market tends to soften, but also carriers start to come in when there's a hardening piece to that. When we mean hardening, we mean that prices are very hard to obtain from the consumer level, but rate is very high. So sometimes carriers kind of step in for that. Most of you, I'm sure you know, of Citizens Personal Insurance. Some of you may have a policy with them. And of course, there is a route to take with Citizens. A lot of customers and new policyholders are placed with Citizens because they cannot meet the guidelines and the appetite in the private marketplace. With Citizens, we consider that the residual marketplace and the carrier of last resort. Fortunately, it's become the carrier of first resort for a lot of policyholders. So what does that mean? Well, one, you're going into the residual marketplace. You may have a slight reduction of your premium, but is the coverage as adequate as you would see in the private marketplace? There is a big distinction between Citizens programs and the private marketplace. Also, Citizens, again, wants to be the carrier of last resort. So what they're going to do is review their book of business and provide takeout companies. So in the last month or so, there was a new insurance carrier that was approved by the Florida legislature called Mainsail Insurance Company, based out of Texas. So they're most likely going to acquire between 250 to 300,000 individual personal insurance policies. There was another company out in Tampa that was just approved by the Office of Insurance Regulation as well, and the Department of Financial Services, because everyone has to go through a tedious process to be approved to do business in the state of Florida. But the goal of Citizens is not to increase their policy book, is to decrease their policy book, to get back into the private marketplace and bring these companies back in. So there is some positivity with the current marketplace. And as we see, probably in the next year, more companies will come in and Citizens will start eliminating their policy book because that's what they're intended to do. Because right now there is an overflow of personal insurance being written through Citizens. And again, it's just not sustainable financially for them in the event of large losses and large claims where Citizens policies are subject to assessments and surcharges. So that's why you're going to see more personal insurance companies come in and do personal insurance. So let's talk about why we're here today. We're talking about HO6 policies, or the unit owner policy, okay? Now, the main difference between what you have, a single family home and a unit, is that you're not covering the exteriors on your HO6 policies. You're covering your interiors. So what does that mean? So if we looked around the room, let's say this was just a great unit, this is a huge unit, and we start touching the walls, we start touching the cabinetry, we go in our closet, we look at our clothes, we look at our refrigerators, our ovens, anything that you see in there would be the responsibility as well as what you're intending to cover. Now, depending on if you have a mortgage or you don't have a mortgage, it's going to dictate the levels of coverage you need to hold. Most of the time, if it's a mortgage, you're going to say, this is what you need to hold. But some other times it could be very subjective and say, well, my unit, I purchased it for $250,000, but that's what I purchased it for. But what it's the real cost to rebuild, right? So we have to really review our unit, review our personal assets and say, okay, well, if I purchase this unit, and it had the original flooring in, but I ripped the original flooring out and I put Calcutta marble in there, well, that's going to increase, that average coverage, and I have to anticipate what the cost will be for that. Other items to understand, okay, what's the level of contents? So if you took your unit and flipped it upside down and started shaking it all out, that's going to be all your contents. So people can consider their appliances, they can consider their clothes, they consider their furniture items, and so on and so forth. That all has a value to it. So again, when underwriters review, they usually take your value of your dwelling or your coverage A, and they create a percentage, let's say 50% of your coverage A dwelling, let's say 100, and now they're going to say, okay, well, 50% of that, $50,000 is for content. Included in that, you have personal liability. Personal liability really takes in effect for claims that for third-party damages. So let's say someone slipped and fell in your unit, pay for their injuries, got to pay for the medical bills. That's why that liability is there. Also, too, one big thing, especially in condominium towers, is water damage related claims from one floor to the next. So a lot of people probably been exposed to maybe one of your own homes and in your pipes, your exposed pipes, so under your sink, exposed pipe from the toilet, it gets ripped open, and now you have a deluge of water, right? So if that water flows down, it's going to come back to you. That's why you need the liability inside of that policy. And liability limits range across the board. So every carrier is going to have their own range of liability. On average, most policyholders hold $100,000 in liability. Okay. There's also bells and whistles included inside your policy that would need to be considered. And one thing that has changed a lot here in South Florida for older property is water damage limitations. So underwriters are saying, okay, based on the age of the building and where you're located and possible updates to the building, we may not be willing to insure for full water damage in your unit. So we may say we're only going to cover you for up to $25,000 in water damage. Because we're in South Florida, water damage is such a prevalent claim being processed throughout the carriers, so they tend to limit that. So when you're reviewing your policy, do you have any limitations for water damage? I would hope we don't want limitations for water damage because that's one of the main perils to insure. And of course, windstorm insurance. Other types of endorsements or added coverage that you can review is water backup and sump backup. So sometimes, let's say your toilet backs up and then now you got all this nastiness inside your unit. Well, there's coverage for that. There's also coverage for mold related damage as well. So if you're outside of your unit for some time, let's say you're seasonal, water comes in, it sits, mold spores. So these are just add-ons to a policy. One main add-on that everyone should consider in talking to your agent about is loss assessment coverage. Loss assessment coverage from a unit owner's side pretty much provides payment if, in fact, the association has to special assess due to a covered peril or loss. So, for example, let's say we have a hurricane and we met our deductible from this large building, and now the association says, well, we have to pass that cost down to the unit owners to pay the out-of-pocket deductible. So if you go to your carrier provider and say, I'm being assessed for a covered loss from my association's policy, how much can I collect? And that collection could be range from $1,000, $2,500 to $5,000, depending on the type of carrier that you're placed with. Additionally, what you need to really understand is how do you properly cover yourself, but ultimately, how can you change some of the premium that you're seeing right now? Well, to look at that, some people will say, I want to put additional risk on myself if my carrier allows me to. Or let's say that you don't have a mortgage. So some folks right now are really struggling. How do I insure properly, not only my unit, but how do I even pay for my policy? Because the windstorm coverage is so expensive. Well, some people that don't have a mortgage, you can become your own risk bearer. No one is telling you to insure your unit, only yourself. So how do you protect your own assets? Some people will say, well, if I have a great roof on my building and I have impact windows, let me just say I'm going to self-insure for any windstorm damage, but I'm going to purchase fire on my unit. Also, if you do purchase windstorm insurance, what type of deductibles are being offered? Range right now in personal unit owner policies is either a flat dollar amount or a percentage. So you can have a $500 flat deductible for windstorm, $1,000, $2,500, $5,000, or a percentage that usually range from 2 to 5%. So when you're reviewing your policy on a renewal basis, how much risk are you willing to incur yourself to offset some of that premium increase? So when you're talking to your agents, you have to ask them what other deductible options can be provided and how much can you afford on your own, right? Because we always have to make ourselves whole again. But because how rate transition goes each year, if people say, I have a claim, my rates are going to go up. Well, that's possible and that's not possible. So how much can we limit the carrier paying us out versus how much can I share in the loss with them? If I'm able to share in the loss, maybe my rates won't be as effective because I chose a higher deductible because I'm capable of paying an out-of-pocket deductible on that side. Also, when you're looking at personal liability is that main lawsuit against you, right? Personally. So someone slips and falls, you're liable for their damages, bodily injury, property damage of third. How much are you willing to risk versus it goes to your personal pocket versus the carrier's pocket? So again, that could range from 100,000 coverage to 300,000 to 500. Some people may have a lot of assets. They want to protect themselves. And you may say, well, how do I incur more coverage? Well, you can purchase a personal umbrella policy. A personal umbrella policy has certain attachment points, or we like to call certain limits you need to meet before your personal umbrella steps in. So traditionally, on your personal homeowner's policy, you need a minimum of around $300,000 in personal liability to purchase an umbrella. Typically, an umbrella is at $1 million limit or so. Okay, you need to bridge the gap. So if you have 100,000 and you want to get a personal umbrella, again, you need to meet the gap and raise those limits of liability. All right. So some people may say, I just want to have personal liability on my homeowners, but not necessarily I'm going to add my vehicles and such like that. So speaking of vehicles, personal auto is a big deal as well. Again, varying levels of coverage, but specifically keeping on the task of why HO6 policies are so needed. A lot of people don't have them because they don't have a mortgage or simply they're willing to risk it. So again, you just have to ask yourself, how can I protect myself here for damages that I'm negligent for, but how do I protect myself if I'm not negligent for them? What's the process for that? Is my carrier going to make myself whole again? But we have to understand, do you have the proper coverage in place? Do you know about your deductibles? Have you met the deductible? And how fast can your carrier make you whole again at that time of loss? So here, what we see traditionally is a lot of condo towers and folks that live in there simply just do not have insurance. And that is okay. That is their choice. But when it comes down, if they're negligent, they will be sued personally for all those damages, and there's no one to protect them. Because at the end of the day, an insurance company is here to defend and pay out claims. So if it's your fault or someone else's fault, again, your insurance carrier is here to help you get whole again. Even though some people may say insurance companies don't have my best interest, they do have your best interest. You are their customer, and they will do everything they can to make you whole, but also fight for you at the end of the day. So there's a couple questions, that I probably answered already, but I'm just going to go down as some folks had some questions already. So why is insurance so expensive in Florida? Well, as we talked about, there is a very limited appetite for carriers to price themselves accordingly. They're in a losing scenario with high claim volumes. But more importantly, they have to kind of fend off some of the attorney parties here. So one change that happened in the legislature a few months ago is the one-way attorney fees and assignment of benefits. So that has caused some friction in the marketplace. But now with that law being passed, we may see some alleviation on that side. Insurance will go down. This is cyclical. Insurance rates have gone up and insurance rates have gone down. One of the main issues why insurance rates have gone up is the inflationary environment we live in. So if you took your unit and you had a total loss, can you really buy the material and pay for it at the limit of coverage that you have? Possibly. But the rate that you're paying is where the carrier says, this is where we need to be. God forbid there's a total catastrophic loss or a total loss in your unit. So the price of labor, the price of material, the price of supply has all gone up. And when inflation goes up, you're going to see that inflationary environment come with insurance. It just equalizes itself. Why do you think your car insurance is so expensive? If people have nice cars, look how much technology is in there. Look at the microchip shortage. All of this costs money to the insurance company that's driving the rates. But Florida by itself is a monster. But the legislature is doing as much as they can to impact personal insurance. And again, it starts with what they did a few months ago. But again, profitability has come back in Florida. In the first quarter, a lot of carriers saw profit. That's why you're seeing companies come back in and doing business. It's going to be a slow process, but they will come in. So how is insurance premium calculated? Well, everything is assigned a rate by the underwriter. So if you took a look at your unit owner policy, what's your dwelling being covered at? Let's say it's 250,000. Well, that's going to be charged a certain rate. Your contents, a rate. Liability, rate. Loss of use, a rate be assigned to that. But then you can have credits being involved in your policy. So if you have, everyone knows what a wind mitigation is, right? 4-point inspection. So if those are positive applications you send to the underwriter, credits will be involved on that. So they'll start discounting. So for example, here we have a good roof and we have impact windows. Everyone should be seeing a credit on your insurance by having them. If you're not seeing that, make sure you ask the office for an updated wind mitigation because we have that for you. But a carrier may request you to perform your own wind mitigation for your own unit. So that is quite possible. But everything has an assigned rate on your policy. So if you look at your policy on the first page, on the right-hand side, there should be a layout of all the charges for each individual line of coverage all the way down, as well as your discounts on that side. We talked about Citizens Insurance. Citizens Insurance is a residual marketplace, carrier of last resort, but a lot of folks are going there because they simply either cannot find insurance in the private marketplace or it's just very expensive on that side. Again, we're in a pattern of people and folks going to Citizens, but it's going to start getting taken out where your policy may be with Citizens, and now it's with a whole new company on that side. So basically, Citizens is breaking off chunks of their book and giving it to this carrier, giving it to that carrier. So again, if you're with Citizens, that may happen to you in the next few months, or let's say going into next year as well as the market softens down. What kind of insurance does Citizens write? Citizens writes only homeowners. So they're not an auto insurance market. They're not a jewelry or art marketplace, simply personal homeowners insurance. So Citizens, depending on where you're located, most of the time writes a residential multi-peril policy, meaning it covers wind and your basic coverage perils, so mainly fire. There may be limited or no water damage included in that. So if you have Citizens, you may want to just review what perils do you have insured on that side. So why is Citizens Insurance become the largest property insurance company in Florida? Simply, that's where everyone is going to based on financial relief. They're looking at their renewals. They're saying it's going up 50, 60, 70%. I just can't simply afford it. Well, that's a reason why people are going to Citizens. But with other folks, as we discussed earlier, are we really looking at our policy and just saying, okay, why is it increased? But are we really looking at what the coverage is being provided? What are the deductibles that are being offered? And are we going back to our agency partner and saying, okay, I like my carrier. I just don't like what they did to me. I want to stay with them. What can I do differently? Most of the time, private carriers are there to take your money and say, okay, hey, we'll keep you, but what can I limit? What deductibles can I raise? Can I take wind insurance? Will the carrier still accept me if I took wind insurance off? Are you willing to do that and risk that? But a lot of people are just simply looking at their policy or being non-renewed. That's another big factor. Your policy can be canceled or non-renewed at any time from the time of renewal. So if these carriers are losing money or simply we're just getting out of the space, then that could be a reason why folks are going to Citizens. What are their options besides Citizens Insurance? So here at Brown & Brown, we work with many different carriers. Top carriers that we work with are Chubb Insurance Group, AIG, Pure, Berkeley One, just to rattle off a few. We actually work with Frontline Insurance. So I'm not sure if you've heard of Frontline, but they're one of the largest personal insurance underwriters that we work with at Brown & Brown. So there are multiple options. So when you're talking with your agents at renewal, you just have to ask them, what is the marketplace telling you about my account? What other options are available? If I got non-renewed, is Citizens my only option based on price? Well, if that's okay, show me that, but show me what's higher, because maybe you're willing to go with them, but really to adjust what you have in the actual policy. But there are multiple carriers that you can go to, but it's also about the agency partner that you work with. Some agencies just don't have all the appointments and all the carriers. Brown & Brown, we're one of those agencies that have majority, but not all the carriers in the state of Florida. So as much as we access, we're able to present. Sometimes you may have access to all the carriers, but where you live does not meet their appetite. So that may be just how the cookie crumbles for a lot of folks on there. Do I need property insurance for my unit? Of course you do. Can I tell you to buy it if you don't have a mortgage? No. But what I can tell you is, how do you want to protect your asset? Do you have enough money in the bank, God forbid there was a total loss, to rebuild back up? Or simply, are you just going to sell your unit? So that's the question everyone has to ask themselves and say, how can I make myself whole again? It's not mostly about the asset, but the liability factor as well. So if you don't have no homeowners policy, I would behoove you to buy a personal liability policy just in case, for any damages that come into your unit from a slip and fall or anything of that such nature, from a bodily injury or third-party property damage. Again, remember the example of the water flowing down to multiple units. That's liability, right? So I can tell you, everyone should buy homeowners insurance to protect your assets. So if you're willing to protect your assets, then you want to buy a homeowner's insurance policy. Question, the follow-up is that, what should I purchase? Well, you can purchase every coverage that's built into the homeowner's policy, or you can select certain items to be excluded. A lot of folks buy dwelling coverage. So that's going to, again, be your interiors. So not your contents, right? So everything that you see in your unit is considered the dwelling. So if you have nice flooring, if you have nice wallpaper, anything that's fixed to the unit is considered the dwelling. If you have content, so you flip over your unit, you shake it out, see furniture, clothes, etc. One thing to make sure of, that if you have jewelry, art, that's very limited on a policy. Typically, it's only a max of a $2,500 payout. So if you have beautiful diamond rings, you have Picasso artwork, you have a collection of stamps that are invaluable, I would suggest that you talk to your agents about a collections policy. So one item that we see from diamond rings is people are washing the dishes, they're out, and somehow the ring falls. They go to their homeowner's policy. Homeowner's policy says, "Well, how much was it?" It's $15,000. Ooh, I don't think we're doing that for you. So you put that on a collections policy. Let's say you're out and about, you're out here in Pompano over here, and all of a sudden it just falls off, or you got diamond earrings that just fall off. Collections policy would trigger in the event of mysterious disappearance. It's a very broader form on that side. So if you have those items inside your unit, I would behoove you to talk to your agent about a collections policy for that. What is an umbrella policy? So a personal umbrella policy follows your primary liability limits. So for example, you need to meet a certain attachment point. So we call that around $300,000. So anything in excess of that limit on your primary policy, your personal umbrella would help you. A lot of people buy personal umbrellas for their auto insurance. So here, most of the carriers have an attachment of $250,000 per accident, per occurrence, and $500,000 any one accident on that side. So if you want to purchase an umbrella, you need to have those limits for auto insurance. So if you have a $300,000 or $600,000 accident that you're negligent on, and that's all you have is $250,000, you're on your own to defend yourself on that extra $100,000. But if you have a personal umbrella, that's when it starts to trigger in for you. And again, too, if you feel that you have something that people can take from you and you're needing that protection, because again, liability, the carrier here is to defend on those sides. So again, if the way you are personally, if you have an affluent background and you feel that people are going to take you to the house, then I would encourage you to buy a personal umbrella. Can I purchase insurance from my main place of residence, either New York, Illinois, to cover my property in Florida? That really just depends on the carrier appetite. So some carriers just may say, we like New York, but we don't like Florida. So you have to ask your agent, does my carrier allow me to have my residence in New York and schedule my Florida location on that side? So some carriers do have the availability to do that, but you just have to ask your agency partner if that's allowed with your particular carrier. If I purchase insurance in Canada, would it cover my property in Florida? Again, that's a question to the carrier that you're with. Some carriers have the ability to have geographical regions. So for example, their coverage territory extends to America, pretty much all of North America. But if we're talking about America itself, its territories and its possessions. So in your policy documents, it's going to have a coverage territory. So if in fact that coverage territory extends to your Florida residence or your Florida risk, then it could trigger for coverage. But again, I would ask you to ask your agency partner, review your carrier coverage documents to determine if that's possible. A lot of our clients have residences outside of America. So again, if that carrier allows us, we can schedule those properties on that side. If I'm having work done on my unit and a person hurts themselves, and am I responsible? Sometimes, yeah, it could. So if you have someone working on your unit, please ask them if they have workers' compensation insurance. Please ask them if they have general liability insurance. It just because that truck says licensed and insured doesn't always mean licensed and insured. So you have to make sure that you ask them for a copy of their workers' comp certificate of insurance, as well as their general liability insurance as well. To go even further as a technicality, you would want to be listed as an additional insured on those certificates of insurance. Okay. But anytime that you have someone coming into work, even the office here has to check all the vendors that come in. So they have a very good standard practice here. So I'd encourage you to do the same. But you always want to ask for certificates of insurance. And also, if you have an agency partner, ask your agent, hey, can you review the certificate of insurance for me? I just want to make sure that it is valid. So next question is if there is a water leak from rain through my window, which causes carpet and floor damage, who is responsible to pay for the repairs? Well, I would encourage you to read your condo documents for that, right? Because of exteriors of the building, that may be the building that's responsible for that. But at the end of the day, the process would be that you call your insurance company, let them know the damage. Did you meet the deductible? They will address and adjust, and then from there, determine who's negligent on that side. Again, but I would encourage you to read your condo documents to really determine, okay, who at fault is that?
About Mike's working now. You had talked about that the office, if you have a contractor renovating your kitchen, the office is making sure that they're licensed and insured and have the proper paperwork. We still have to do that as well as homeowners?
Well, I think they're coming in to protect the association level areas, right? So they want to make sure if you're coming in with a ladder and you bang a common wall that's responsible to the association wants to make sure that they're able to go back to their policy for those damages. Now, I don't know, again, depending on how the office reviews everything, again, I think it behooves the unit owner and the owner to really confirm that certificate of insurance for you. That's what you really want to do. Because again, the association has their responsibility and you have your responsibility, right? Because once they're in that unit, they start damaging anything and slip and fall and getting hurt, that's on you. It's not on the association to say, hey, why didn't you do that? They're checking for themselves and making sure that anyone that comes in and walking through the common areas and elements has their own insurance. Sorry. Okay. If there is damage to my unit or automobile, how does the insurance company estimate the loss? So this seems, again, going back to your dwelling coverage. So the first part, if you have a fire in your unit, they're going to determine the amount of damage, as well as did you meet the deductible and exceed the deductible based on that damage. So your policy is an aggregate of limits. So you have $250,000 and you have a $10,000 loss and you have a $1,000 deductible. Well, the carrier is going to pay out $9,000 and you're going to have $241,000 left for the policy term. If you exhaust $250,000, you're done for the rest of the year. Your limits do not regenerate itself at the time of loss. But an estimate is also based on the loss evaluation. So some policies may have replacement costs and some policies have actual cash value determination. So when you review your policy, is your policy replacement or is it actual cash value? Actual cash value includes depreciation versus replacement cost is just minus your deductible. Cash value, depreciation, minus deductible. Okay. Same thing for auto insurance. Auto insurance can be written majority of the time on actual cash value. If you're worried about that brand new Mercedes that you bought, you may want to ask your agent about stated value. Okay. Stated value is not going to include depreciation on that side because once you take it off the lot, it's a depreciating asset already. You may pay a little bit more for that, but it is a broader form of a loss evaluation. And again, determinations based on the value and how the adjuster determines, okay, what is the cost now to make you whole again on that side? Do I have insurance for cyber crimes occurs to me? Again, depending on your policy, you may have cyber insurance built into your policy, or separately, you might buy that standalone through another product, but there possibly may be a little bit of coverage in your homeowner's policy. What kind of insurance do I need to purchase to protect myself from a cyber crime? What would it cover? Well, again, reviewing your policy documents, depending on the type of perils to be insured. So one of the large perils to be insured on cyber insurance is network intrusion, right? Going into your personal laptops, personal phones, and such like that. I would never tell you, always be diligent on any phishing scams. Don't open any attachments. Don't do anything. Some people may not buy a policy, but maybe they're buying a third-party product through Norton Security VPN, such like that. But separate policies can be purchased for cyber, but you can maybe able to build that back into your homeowner's policy on that side. So it's really about how can someone get your personal information through a network intrusion or taking any type of private information on that side. We do a lot of cyber insurance on the commercial space. So a lot of my business partners purchase cyber liability. Actually, the association has cyber liability itself, again, to protect for those hacking, malware attacks, and virusware attacks that may come in. If I have a loss, is it necessary to hire a public adjuster? It's your choice. If you disagree with your insurance company, the next thing you're going to do is call a public adjuster. But I will tell you, once you hire a public adjuster, they are the ones advocating for you. You're going against your insurance company. You disagreed with them. So what's going to happen is a public adjuster is going to be hired by you, and that public adjuster is going to send your case to an attorney partner of their choice, or let's say who they do business with. But now you're going against the insurance company. Most of the time is they offer me 100, I deserve 250,000. So that's when you determine, okay, is a public adjuster necessary? That's when you get a little bit angry with your insurance company. What does a public adjuster do? They simply advocate on your behalf. An adjuster works for you on the insurance company as well. But if you disagree with them, then that's when you hire someone else to really advocate for you, because you said, I paid all this premium, I deserve X amount. Okay. How much does a public adjuster cost? Well, they make a percentage of a commission based on what you get out of the insurance company. I'm not a public adjuster, so I don't know exactly what they make, but everyone has a certain commission or percentage rate. Sometimes the state of Florida caps how much an adjuster can make on certain losses. So I think that's something that you have to ask a public adjuster once you hire them. What do I have to do in case I don't want to hire a public adjuster? Don't have a claim and work with your insurance company. Simple as that. So if you believe that your insurance company is just and right, and you agree to what they paid out, then you don't have to hire a public adjuster. But the only reason why you hire a public adjuster is because you disagree with the payout that from your insurance company, or you feel that they did not represent you accordingly due to the terms and condition of your policy. If an owner receives permission to build an electric vehicle charging station, would it be expensive to purchase insurance for this? Probably so. That separate insurance is going to be dependent upon ensuring the actual charging station itself, but making sure accurately you have a good electrician to make sure the wattage is appropriate to whatever they're hooking up with. Because you don't want to be liable for an electrical fire or arcing or surging because the electrician did a poor job installing on that side. But EV charging stations are becoming more prevalent due to the EV vehicles on the road. But that's going to be your responsibility. But you have to make sure you're talking with the association here, getting approval by the board, and making sure you're taking the necessary steps to ensure the piece of property, but also ensure for any liability that comes with utilizing the electrical panels or however that's being hooked up here at the association. From a pricing standpoint, I'm not sure how much that costs. In my experience, a lot of associations have built their own and provided electrical charging stations because they know the way of the future. So it's really up to them. We have a minute and a half. So everyone in the online world, we're going to go move to part 2 in just a minute, So stay with me. You have the new link. And then lastly, if I work from home, do I need to purchase a special insurance policy for any reason? I don't know how to really answer that. I don't know what special insurance you would need. I think your homeowner's insurance is fine. I will tell you, if you're an independent contractor doing business here, you may want to purchase a business liability policy for any damages that you would do, I guess, in the event of your work. Um, that's a tough question to answer. I don't really know what you need to purchase if you work from home. If you work from home and you have a company that you work for, I think you're pretty much fine on that side. But I guess if you're utilizing your own equipment from computers and such like that, you just want to make sure it's properly insured and it's included in your homeowner's policy. And we'll do the questions on part 2.
And if
Is that's what it's covering on that side. So if your unit gets damaged from a fire or a hurricane or water damage, that's what it's protecting on that side. So anything that you see, and again, if you flip it over and start shaking it out, that's what that policy is intended for, to make you whole again in those types of losses. So once you enter your unit, that's all your responsibility to ensure if you have to.
So what else should I have? Because I think I talked to my agent about flood
So
and I think they said that I didn't have that, or I didn't need it, or I didn't get it, or whatever the case may be.
well, if you have a mortgage, most likely you have to hold flood. So if you have a mortgage, most likely they're going to determine that you need to hold flood, even though if you're at the highest floor, unless, Noah's flood's going to come over here, you're going to be impacted. But anything from a mortgage requirement may determine you need to hold flood.
I think it was because like if you're on the 8th floor, I guess you'd have to have a tsunami to.
Yeah, you have to have a very large.
So that's why they
tidal flood.
suggested I didn't have flood then. Probably.
Well, they suggested that you didn't have it, but again, if you have a mortgage, you may need to hold flood insurance for your mortgage. So I would just confirm that, or unless you own your unit outright,
Yeah.
then it's not a risk that maybe you really have because of how high you are.
Okay. And then also, so is anything really covered in the contents? Is my contents covered?
For flood?
Well, just in general, like.
Yeah. So when you're reviewing your policy, you have coverage A, which is your dwelling coverage, and coverage B is your contents coverage. So typically what an underwriter will do is let's say you have $100,000 in dwelling coverage. Most likely they're going to put a 50% limit based on your content. So let's say $50,000. So that's how they're going to break that out. So again, your contents, flip over your unit and start shaking everything out. Clothes, furniture, appliances, anything that's not fixed to your unit is considered contents.
So I should really pay attention to, like, I should review my policy and look and see, because I did some upgrades to my place, and look
Right.
and see if I think that whatever they're telling me, plus our units have gone up because,
Well,
it's a hot market, right?
Well, I
So-
think that just because values of homes and units have gone up due to the marketplace may not necessarily equalize what you have in your unit. So if you've installed new flooring, new wallpaper that has value to it, you may want to consider increasing your dwelling amount based on how to make yourself whole again. So again, go back to the example, you have cut a marble in there, you installed on the floors. Well, that costs you a pretty penny. Well, if your policy says 150,000 in dwelling, but that costs you 50,000, you're underinsuring yourself. So that really has to go into effect. So talk to your agent and say, hey, I just did a great remodel. They're like, oh, that's great. That's awesome. Good for you. What did you do? How much money did you spend? That's when they're going to have the idea, okay, how to properly insure.
I have a question. I never thought the walls were included. If you shake your apartment, the walls are still there, just the paint. Is
Right.
that right? Just
Right.
paint?
So in associations, the building is really responsible for the rough drywall, right? But they're not going to come in and put that beautiful wallpaper that you had on your unit. So that's going to be where you need to decide, how do I properly insure myself? But yeah, the paint, correct. Paint, wallpaper, flooring, those types of items and that's considered the dwelling. So even your cabinetry, because again, it's fixed. Anything that's fixed to the unit is considered the dwelling coverage inside of there. Coverage A.
If we want to get a quote through Brown and Brown for our HO6, what is the procedure? Do you have a phone number that we?
Yeah,
call?
so we have the information here. Also, the office has my contact information. I'll tell you, being in personal insurance for many years, I take a more of consultative approach to your policy. So even I've done it a lot here where I just review your policy with you and let you know you may be in the best spot, but maybe let's talk about of coverage, but also deductibles as well. But we can assist you from the personal insurance marketplace. But again, the association office does have my contact, and I can introduce you to our personal insurance team, and they'll take it from there.
Thank you.
Thank you.
Anybody else? A question? Hold on.
Would you please define all other peril?
Sure. All other perils is considered fire damage, water damage, lightning, theft, smoke. So that's outside of wind, hurricane. So there's going to be a separate deductible for wind, hurricane damage and all other perils, but those would be your main perils to be insured for. It's short for AOP.
Any questions on Zoom? Is everybody awake on Zoom?
You're sure it's called snooze, not Zoom. Oh yeah.
I find it interesting.
We have.
Unmute Howard then, and he can talk.
Okay, so, Nick, is the windstorm deductible, is it a percentage? And all other peril is stated as a dollar amount? Is that one of the differences?
So Howard asked, is the wind deductible a percentage, and is the all other perils deductible flat dollar deductible? Majority of the time, your all other perils will be a flat dollar, and your windstorm may be a percentage. Some carriers may offer a flat dollar on both, but again, reviewing your policy documents will determine its percentage of the dwelling or percentage of the contents, whichever is impacted on there. Again, varying between 2 and 5%, or even as high as 10%.
Okay. I have no other questions. I think you did a great job, Nick.
Thank you, Howard.
Insurance business in Florida.
So Chubb has always been a major player in the state of Florida. It has.
Because I had them in New York and they said they did not, the co-op in New York, and they said they did not insure Florida.
So certain, again, appetite is going to dictate additions to Florida risk. They have been in some sort of exodus in the state of Florida, just due to the current conditions. But 3, 4, 5 years ago, Chubb was a big player in the homeowner space, personal auto. Also, too, Chubb has certain appetite guidelines. So there's a guideline that they had a few years ago that you needed to have $25,000 minimum premium and non-cat exposure. Non-cat exposure is non-catastrophic exposure. So think of it as your collections. Think of it as your commercial personal auto policy, RV and boats, as well as. So sometimes there may be an appetite, but again, Chubb is one of those carriers that may be able to do it. We've seen Chubb get off certain risks due to age of the building and location. Again, Chubb is one of our main players that we place business with. So again, if you're with Chubb, you just may want to ask them, okay, am I meeting the appetite for you to add my Florida risk? You may be able to, if you have Chubb, and say, okay, what if I forego the wind insurance? Would that make me more appetizing to you? Because that's what they're really concerned about, is the wind as well as water damage for older property.
What do you think of universal property? What happened?
What I will say is that they fight for their clients very hard. Probably Irma. Yeah, they fight for their clients. They're their local shop, their local company right here on Commercial Boulevard. We do business with them occasionally. We don't place a lot of business with them because we have other partners that we work with. But I will tell you, in the event of a loss and you're not at fault for that loss, I will tell you they will fight tooth and nail on those subrogation claims. I see those a lot, especially in the condo towers. So I think they advocate for their clients very well. But of course, everyone's going to have a certain idea about their carrier, how well they service their claims, how does their rate fluctuates from year to year. But in my experience, they do a good job for their customers. Because it probably wasn't your fault, right? Exactly. That's right. That's how good they are. Well, a lot of companies have that practice too. So if you fit the deductible, to get you whole again in the interim, they'll go through their subrogation team. Subrogation team will give you your deductible back on that side. That must be the only positive comment all day.
People are getting serious about making us safer.
Yeah, then that comes down to all, decisions of the board and how they insure the actual building on that side. So making sure you have proper levels of coverage, deductible situations, but also no limiting factors and exclusionary language. And again, that's why when you look at your policy, you want to make sure, okay, is anything limited on that side? Are they limiting my water damage? Are they not giving me coverage for mold or water backup? Do we have a certain loss evaluation on my dwelling as well as my contents? Is that replacement cost or is that an actual cash value? Are you willing to take more risk on your side as well? But I think at the end of the day, looking at what you're trying to protect asset, and that's going to be determinant of what you purchase in the marketplace.
Does anybody else have any question?